Okay, folks, welcome to Thursday Night Stock Charts Live. This is Bob Desmond, and what we're going to be talking about today are the weekly charts. And in fact, in some cases, we may be doing monthly charts. Why? One trading day left in the month to go, and a lot can happen. A lot can happen. Uh, I did not expect to wake up this morning and to see the triple Qs rallying up higher. We have a short position, so I was not happy about that. But be that as it may, the Qs were up for a good portion of the day, and then they did what you call a bearish key reversal and closed down below critical support, which is good for us. But the question is, do we stay there? Do we gap up? What economic data is coming out tomorrow that can help influence, for better or for worse, the price of the triple Qs? And we'll talk about that as well. We're going to talk about the Federal Reserve's balance sheet and the fact that we're getting rate cuts. The question is it going to be a quarter basis point? Will it be a half basis point? I'm going to be able to answer that question for you tonight. How do I know? CME Fed Watch tool, subject to change. So let's get to it. Let's say hello to folks that may or may not be on. If they're not on, I will still say hello to them. Hello, world. Sean, welcome. Of course, Sean. Hey, Sean, were you able to get into the network? I saw that you signed in. I sent out an invite. I'm just wondering whether or not you were able to had any issues at all. So I'm going to be able to demonstrate. I'm going to share tonight what the network is going to look like. Because, folks, for those who are wondering, what the heck is this guy talking about? We're launching tomorrow a free public network for traders. You will pay. You go to any of these websites out there that have these forums, you'll pay between $50 and $150 to $300 a month. Right now, it's free until we get an organic community. And then we're going to bump up the price a little bit. It's probably never going to get to $150 a month, but prices will go up. Use the link below if you're watching this on YouTube. Use the link above if you're watching this on Twitter. And in fact, if you're so inclined, you like QR codes, here is the QR code. Scan that. It'll take you over to this page here. You're not going to be prompted for a credit card, either when you enter your name on this list or when you get the invite to join our network. So take a moment, pause, enter your email address. We go live tomorrow. For better or for worse, we're going live, and we'll fix whatever we got to fix on the back end. So let's take a moment and talk about. Let's first stop. Let's finish saying hello. Pete, welcome. George, welcome. Where are you from? Georges, I guess it is. Georges Andre. United States sounds like a French name. Rapsuka. That's a cool name. Danny, welcome. Okay, so here is the new network. It's showing here that we're live. We have all the events that are scheduled here. Here's the feed. It's very Facebook-like. And this is not exactly what you're going to see on your end. Okay. Okay, Quebec City. I've always wanted to go up there. I remember as a kid, I'm a big student of history, and I carry that into the trading markets. But one of my favorite stories of all time, I was always focused on the French and Indian War, Revolutionary War, was the siege of Quebec by the Brits. And what a fortress that city is. Amazing. So I have never been up there. I want to get up there. Maybe I'll do it this weekend. So not this weekend, this year around Christmas. But welcome and thanks for being here. Tim, have the invites been sent out? Want to make sure. No. Well, to our members, yes, they went out. But right now, I'm going to be working through technical issues. They're sure to happen. I want to make sure that they have access to the areas they need to have access to. And but either way, we are going live for everybody. We're not going to wait for perfection. What we're looking for is actionable versus perfect. We'll worry about the details. We'll worry about all the resource library after we're launched, because I don't want to pretend I know exactly what everybody wants. I don't. I'm going to be relying upon folks to share what they want, and then we deliver on the vibe of the community. So you can see that, if you go over, like, this is the main feed here. All right, everybody has access to this. All right, this is actually the main feed here. I just launched this, so there's not much here yet. What else we have is the members. These are all the members that have signed on. They're going to be more soon. But you'll be able to tap on each individual, see how close they are to you in terms of locations, et cetera, who's online now, et cetera, et cetera, et cetera. And we'll be doing a lot of polls, because, and I should have done this earlier. And I'm still learning this. Create. No, that's not it. Why do I create the poll? Create poll. Where is it? Here it is. No, that's not where I want to be. I'm wasting time here. Here. This is what I want. So this will be automated for every live stream. What are the symbols tonight? And boom. There we go. And we'll put a little bit of happy face. And there you go. Okay. So we already know that Sean, you didn't receive an invite? I'm wondering why it was so quiet. Okay, I'll resend it, but I'll add you on here. All right, so this is where, moving forward, when we do these live streams, when I do stock chart requests, I'm going to be going to this poll here, looking to see, okay, who wants what? That way I'm not looking through the messages, which is a nightmare at times, because you guys, especially on Sunday nights, that feed goes fast. It goes really, really fast. It's hard to get all the messages. I go right here, and we're good to go. So SILV. It's driving me. This is my OCD. Pure OCD. Okay, so head on over, folks. It's going to be really cool. It's free for now anyway. Link below if you're on YouTube. A link above if you're on Twitter, and or scan that QR code right in front of you. Let's get to it. Enough with the plugs going on with the forum. See you on the other side. All right, let's talk about the week and economic data that has come out. And this week we had durable goods orders that came out, and a lot of people were saying, wow, durable goods orders showing a lot of strength in the economy. Well, the thing to remember is that durable goods was driven this month, as it was the prior month, by Boeing. So Boeing had to ground their fleet or whatever the heck they had to do. So they impacted negatively last month's durable goods orders. This month they rebounded. And you can see here, as a matter of fact, if you X out transportation, durable goods came in negative. So if you take out Boeing, durable goods came in negative. Inflation still on the housing front. Non-farm payroll, non-farm payroll. I keep doing that. Initial jobs claims came in slightly higher than expected. Nobody cares about this anymore. GDP second revision. They want you to believe that the economy now grew at 3%. They can't get non-farm payrolls right. They just had to revise down non-farm payrolls by over 800,000 jobs, which didn't exist. They reported that they did, but they don't exist. So they want you to believe that we're growing at 3%. Then why do we need rate cuts? Why would we ever even think, with inflation still grinding up above 2%, why would we think about rate cuts? Somebody riddle me that, please. So I guess they didn't time this part properly here, because at the same time, or actually I should say an hour and a half later, after they reported GDP now grew at 3% in Q2, they also reported that the July pending home sales declined, not expanded, but declined by 5.5%. Boom, just a total crash. That's a crash in the housing business. Pending home sales dropped to pending home sales dropped 5.5% to all-time low in July. Think about it. Think about what we've already discussed here, right? What are durable goods? What are durable goods? Those are washing machines, dryers, big ticket items that last a few years. Okay, when people buy new homes, what do they buy? Washing machines, dryers. So is it any coincidence that we had a major decline in home sales, and durable goods orders came in negative? I would say that's a direct correlation. That's the ripple effect. That's the ripple effect by home sales declining. So people wonder, what does that have to do with the stock market? It has a lot to do with the stock market. It's telling you that the economic cycle is slowing. Tomorrow, we get the PCE that comes out. That's the Federal Reserve's favorite measure of inflation, the core number. They're expecting year over year at the core of 0.2%. Oh, I'm sorry, year over year. That seems strange. 2.7%. So we're nowhere near the Federal Reserve's target of 2%, yet we're growing at 3% GDP, and we need rate cuts. I don't know. I'm just a guy on YouTube. I mean, this is so crazy. You can't make this stuff up. Let's minimize this. Let's make my screen bigger. Okay. So, Sean, I'll get it out to you. You know, what's funny is that you show on here, Sean. I don't want to click on your photo because that's personal information. Maybe it's because I see you're right here, Sean. So it's showing you. I'm not sure why it's showing you, but we'll work through it. We'll get it done. Okay, let's move on. We did the Fed. We did the economy, economic data. Fed's balance sheet continues to roll off debt off of their balance sheet. It's as if they're in panic mode. Like, you know, they really got to pick up the pace of dropping off debt off their balance sheet because they plan on, in the coming months, building it back up. So there's a race to reduce the debt off their balance sheet. And they've declined quite a bit. The however is that we're nowhere near where we were pre-COVID. Do we still have another, at this rate that from which they've been rolling off debt, we need another year, 2 years to get back down there. And they're not going to let it happen. And when they do have to start the printing presses back up again, we're not going back here. You got to remember, there's a law of diminishing returns. Even if they started buying back all the treasury debt to get the stock market and the economy going again, bringing it back up here means nothing. You have the law of diminishing returns. You're going to have to see this double. They're going to have to go full steam potato on this one and double it, just as they doubled it from back here to up here, even more so. They're going to have to do it again. It's the law of diminishing returns. P/E ratio. We are now at 36. Do you guys like these sneakers? I clicked on them, but man, they are targeting the heck out of me. They look kind of old manish. I don't know. Give me your thoughts. Leave a comment below. So we have a PE on the Shiller PE ratio. This is the rear view mirror look. Reported earnings, we are at 36 on the Shiller PE ratio. Now, what happened today? What happened today with the Qs in particular? What happened here? Sven Henrik reported someone leaked PCE. I don't think that's the case. I don't think they did. I think that it's more has to do with something else. I think it's more seasonality in nature. And we're going to go to a chart posted by TrendSpider in a moment. And if it was this, if it was the stock market selling off due to the PCE coming in hotter than expected, well, then you would expect to see the probability of an ease back off some. It didn't. And even if the PCE report was leaked, which I don't believe it was, you would at least see the probability of a quarter basis point rate cut rise versus where we were this morning, which is about unchanged at 67%. Let's refresh this because this does change from time to time. Yeah, no change here. So I don't think it has much to do with the Fed Watch tool. I think it or the PCE being leaked. I think it has more to do with this. This is posted by TrendSpider, and what they did is they broke out, and generally they are very bullish. Buyer beware. The next 2 months have not been kind to the S&P 500 during election years. I'm assuming that's presidential election years. Over the past 25 years, September only had a 33% win rate. October only a 17% win rate. So this is what we have to look forward to potentially in the month of September and October. We only have one trading day left to go before we get into that time frame. And I would argue that the pressure on the equity markets has already begun. TZ Burton, welcome. I'm 62 in the gym 5 days a week, and yes, look like an old man's shoe laying on my house. That's funny. All right. Speaking of the gym, appropriately timed. Man, these guys are spending a lot of money to sell me sneakers. They've got to be expensive sneakers. Lululemon Prince. Lulu Prince Lemons. Okay, I misread that. And Ulta gets ugly. All right, let's go to the charts. Warren Buffett has been buying Ulta. He bought $267 million worth. And that is not treating him well. Let's go to the charts. Beginning it off with Lululemon. They killed it at the when they reported the earnings, but it is now up. The high tick was 277.85. The anticipated market maker move on this trade was about $26. Now, when you take a look at Ulta, Ulta got hammered. So good old Warren bought this last quarter, and he's underwater right now. So those are the most recent earnings trades that we have to talk about. Warning, labor market conditions index has been steadily declining. This is posted by Game of Thrones. This systemically happens prior to recessions. I don't think there's any argument here whether or not this is reflective of the jobs data that's been revised. Not quite sure. As a matter of fact, it's not reflective because this is through July of 24. So this is not reflective of the jobs numbers that have been revised. So this is probably worse than when this was printed. On the upside, 52% of EPS revisions for 2025 have been to the upside. While that's lower than post-recession and or cyclical reacceleration periods, it's still a 65 percentile rank going back to 1985 and right where we were prior to the pandemic. Whether that's good or bad, I don't know, but I don't like the sound of that last part. Posted by Liz Young, really cool gal. I think she's with SoFi. I think she's with SoFi. Let's talk about let's go to comments first, and then we'll go to the weekly charts. Yeah, I don't know how that's going to work. I mean, that's just insanity. You want to talk crashing? If you want to see capital flight out of the United States, that's the law for you. That's the law that you want. Guaranteed, you're going to see capital flight out of this country like you have never seen before. All of these Lear jets, private jets that are parked here now, you're going to see a map of them just going gone. PayPal has outperformed the whole market since the recent VIX spike. Yeah, I want to go over that chart. PayPal is looking really good. Tim, I have read where Buffett has more cash on hand. Yes, he's got in dollar terms. I don't know whether it's in terms of his entire portfolio, a percentage basis, but in dollar terms, yes, the highest level of cash on record for Berkshire Hathaway. But again, I don't know whether it's the highest level of cash on a percentage basis on assets under management. So fact check me on that. Okay, let's talk about the week, and let's keep in mind that seasonality chart that I just went over. The next 2 months during presidential election years do not look good. So let's begin with Bitcoin, which is not the new gold. I own Bitcoin. I want it to go up. Okay. I dollar cost averaging every Monday. I am not a doom and gloomer on Bitcoin. I own it. But the reality is that we trade the market that we have, not the one that we want. Simple as that. And what's this chart telling us? Let's go to the weekly view because we're going over the weekly charts. And you know what? Let's kick it off with a monthly chart with one trading day left to go. I still like this chart. I still think that there is a possibility that we get a macro breakout here on Bitcoin. The problem is if we take out this month's lows, then it's all over for a while. Now, on a weekly time frame, very close to an outside reversal bar, but not quite. It's an inside bar technically, meaning no new high, no new low. Dehydrated. So one trading day left to go here. They could still salvage the week, but I'll tell you, we're down $5,000 here on the week, or nearly 8% on the week. It's going to be very difficult to make up that space. That's a quarterly chart. Let's go to the daily chart. Not looking good here, folks. I mean, we broke support. We broke out. This is what you call a breakout point failure, also known as a bull trap. So they baited in a lot of bulls. They bought this breakout. They did not wait for the retest. Had they waited for the retest, they would have known, okay, the test of the breakout point has now failed. I don't want to be involved with this. This is why we wait for the breakout and the retest, not one or the other, both. So because we had that breakout point failure, this equity, well, this crypto does usually what equities do, what sectors do. If you get a breakout point failure out of a tight consolidation, generally you're going to trend and grind back down to the low end of that base, and in all probability, you're going to break. What did it do? It broke. Now we're doing a check back, retest. I think it fails. I think Bitcoin goes lower. We're dollar cost averaging in. It's fine. CRB Commodity Index. This is not updated for today. We're going to skip this. Yield curve. Okay, folks. I mean, we talk about the yield curve constantly. And it's not that it prevents us from being long of equities. We are long of equities. We just have a measurable short hedge out on equities right now because of this chart. Primarily, this chart has been telling us it is not safe to go net long of this market. Because what is it telling us? It's not only is it broken out to new weekly higher highs, folks, we're virtually on the precipice of the uninversion of the yield curve for the first time in what, 2 years? Let's take a look at the monthly view. Now, I know a lot of people may not be familiar with what the yield curve is and why it matters. We'll go to the chart of the yield curve relative to the S&P 500 in a moment. I know this is noisy. Let's get all this junk off of here. I really don't need all this. Okay, better. So here is the yield curve. Breaking out, almost uninverted now. We have new monthly higher highs. This time last week, we were near the month's lows. We had given back a lot of real estate on the yield curve. I thought we may close negative on the month, but it's since rebounded very, very strong. And take a look at what's grinding up along with it. Gold. What is this chart telling you? It's telling you that there are problems out there. We're going to go to a chart of the US dollar, and it looks nothing like this. It looks the exact opposite. Let's save this. And I'll go to another chart, and I'll show you the correlations. As a matter of fact, I can use this chart. Let's save this, though. So generally, why is this showing in blue? Is it there? Yeah, it is here. Okay. So in blue, I have the S&P 500, which is, for the most part, has ignored the rise in the yield curve. But that's not going to last very long, because once you get the uninversion of the yield curve, traders take notice, because history has shown us, going back, I think max I can go is 35 years, but we'll go back 40. Oh my God. Oh my God. You're killing me. I don't know if it's my internet or what. Hopefully I'm still live here. This page is not working. I have to apologize to you folks. You're going to have to take my word for it. Once we uninvert on the yield curve, meaning bond yields, finally, I don't know what the heck that was all about. So going back to the dot-com bubble, this is still a monthly chart. You could see I had the S&P 500 here in gray. Oil is in black, gold in gold. Once we uninvert and we begin to take off, the S&P 500 has historically rolled over. That's the dot-com bubble. Here's the financial crisis. Uninversion of the yield curve, stocks roll over. Again, S&P 500 in gray. COVID, yield curve, uninverted, stocks. Here's the crash here. Then you got that V-shaped recovery. So warning flag on the track, folks. While historically going out 3 to 6 months after the first Federal Reserve rate cut, equities are usually up. They're usually up. That does not mean at the time of the first rate cut, stocks just take off. They usually do not. And especially now that we're in this seasonality period where I just showed you where your presidential election year, equities in September and October are generally negative months by a long shot. Ten-year yield. Guess what? We broke out. Thursday, one trading day left to go, but on a weekly time frame, yields have broken out. What does that tell you? It tells you that the bond market, they're going to be clamoring for a 50 basis point rate cut soon. TLT, 20-year bond ETF. It's stalling here. Simple as that. Tips, Treasury inflation protected securities. They're seeing yields creep up higher. What is that doing to tips? They're going lower. Inverse correlation. This will probably be a buying opportunity. US dollar weekly view. Now, the dollar has been very weak. It did move up higher on the day today. I didn't see how it closed, though. Last look, it faded off the highs of the day, and it still closed there. I don't think that this holds. I think that we fade here. Right now, you have yields that are moving up higher, allowing for the dollar to move up higher. This is not bullish price action to me. I think that we'll stall here, maybe get a couple of head fake breakouts, and then we roll back over again as we near that first rate cut. And if they go half basis point rate cut, dollar goes right through the floor, right through the floor. Remember, we're growing at 3% GDP, although pending home sales are negative by a long shot, all-time lows. Durable goods are negative. The government is reporting a revised upward GDP of 3%. That's another reason why I don't think that this stock market is rallying, because they don't believe the numbers that are being fed. Euro. Inside bar, no new high, no new low. Yen. This is the big problem for the equity markets, folks. The yen is down on the week. Let's take a look at the Aussie dollar, Japanese yen trade, and how that's doing. For those of you out there saying, I don't know why this guy's talking about the Aussie dollar, Japanese yen trade, there's a reason. It's inversely correlated by and large with the U.S. stock market. If I could find it. Here we go. So this is the Aussie dollar relative to the Japanese yen. Why is it inversely correlated for the most part? I think it's 75% inverse correlate. Excuse me. Why is it correlated, not an inverse? Why is it correlated to the U.S. stock market? Meaning Aussie dollar versus Japanese yen goes up, equities go up, and vice versa. Why does that happen? I have no idea. I have no idea. I was taught it. I learned it. I studied it, validated it, and I watch it. And it drove the equity markets lower early this month. So we have since bounced back, but this is the sell-off that caused a lot of the selling going into August. We have a dead cat bounce here. I don't think that this is over. If we roll back over again, let's throw up the S&P 500 for giggles here. Let's go with correlation. That correlation has come off quite a bit. This was up at 75% a couple of weeks ago. It's come off quite a bit. So it's not as correlated as it was a couple of weeks ago. But that happens. Then it resumes. What you need to look at is the macro view. Go to a monthly chart and see what the macro is. And you can see still at current, we're generally above, except for unusual times, usually above 50% correlated the Aussie dollar, Japanese yen relative to the S&P 500. So if we roll back over again, I'm pretty confident that the equity markets are probably going to follow suit. Why? Yen carry trade. End of statement. Volatility. Down on the week. 1.3%, nearly 1.33%. Let's take a look at the daily view. Consolidating. We've stopped going down. Thank you, Tim. Let's see how we closed out today. Not good. Not good. If I had to put my nickel down here, VIX drops tomorrow morning. And that would be bullish for equities. Dow transportation sector weekly view. Now, we broke out last week, and this week we're doing a retest. So it looks okay. It's holding support. It tested it. It bounced. Let's take a look at a daily chart to get a vibe for whether or not this is going to hold. You know, I don't like faded candlesticks like this. That bothers me, to be honest with you. This is a sign of topping action. Generally, similar to what we saw back here. We pulled back, and then we rolled over. I don't like this candlestick. Dow Jones Industrial Average weekly chart. New all-time record highs this week. So we broke out, did a retest, follow through. Dow Jones looking really good here. Daily chart. You know, new all-time closing highs, but this is a doji star formation, a sign of indecision, a tug of war, if you will, between bulls and bears. And I want you to take notice of something here. We're going to reference this in a moment when we talk about the Qs. Do we have a head and shoulders setup on Stoke RSI? And maybe you're laughing right now. You may be saying, you're crazy. That's nuts. Whoever heard of such a thing? Okay. Remember this. We're going to come back to this in a moment. S&P 500 weekly chart. Money flow going the wrong direction. We are now down on the week by over a half percentage point. Very, very thin volume. One day is not going to help that volume picture. Daily view. We closed up on the day, but just fractionally. We're really fading here. Thin up volume. Let's go to a 30-minute view, get a feel for how they may move us tomorrow. Not a good close today. I'm surprised the VIX looks as bearish as it does in a 30-minute chart with the look of this chart, which is pretty bearish as well. Usually you get an inverse look. If the S&P 500 looks bearish, VIX looks bullish and vice versa. So they closed this week yesterday, gapped us up today, and then faded it. Let's take a look at the Qs. Qs on a weekly time frame, now down nearly 2%. So we're short of the Qs. I took off our credit spread. I sold a call spread. We got out of that one. We made money on that. We have puts. Well, we haven't made money yet. and the SQQQ, where we're still down on that. So we are short of the triple Qs. And to me, what this is setting up to be, especially in light of the seasonality chart I shared with you earlier, is that we have a double top. Now, this in and of itself means nothing. It means zero. Me taking a crayon out and drawing a lower high means nothing. All we need to do is trade sideways, consolidate, form a wedge formation, break out, go off to new all-time highs. Means nothing. So I'm not predicting that what I'm going to talk about is going to happen. I'm saying that it's setting up to possibly work out that way, which is why we remain short. To be fair, down volume is very, very light this week. I would have liked to have seen more volume to the downside as a short. Now, where this picture gets, oh, and by the way, to follow through and have a double top, you need a confirmation breakdown. What would that be? That would be a close below the August 5th lows. We're not there yet. We're a far cry away from there. So I'm not going to go out on that limb and say that's where we're going at current, but it's certainly a possibility. So it always pays to know what the macro view looks like before you start looking at daily charts or intraday charts. Now, on a daily view, this gets worse. You know, we've been eyeballing RSI. You'll note here, I put this rounding top on the Qs several days ago, and the reason for that was that while we were pressing up higher on price, RSI was flashing a bearish divergence. We were rolling over. Money flow, double topped out. Bearish key reversal bar on the day. And by the way, I'm going to be posting my top 5 favorite candlestick patterns in the resource area of the new forum. So you're going to be able to look at all the videos in one shot when you sign up free. Use the link above on Twitter, link below on YouTube, free of charge. And we're launching tomorrow, the public forum. Here it is. For those that have just joined in, because a lot of people were not on earlier. Sign up. You'll get a link tomorrow, and this will be the new feed, and we'll be launching. Look forward to seeing you guys on the other side. So take advantage of it free. At some point in time, we're going to be charging a membership fee, small fee, but just to keep the lights on and pay the bills, because this is not cheap, folks. It's costing a lot of money. So make sure you fill out all of this stuff here, onboarding stuff, and we want this to be engaging. All right, we want professionalism. That's key. Professionalism. People are going to be coming on here and saying, you know, I have a problem with this trade, and we don't want them knocked. We want them to have an ability to put themselves out there and get insight, constructive feedback. If they made a mistake, we don't want to rub their nose in it. We want to talk to them about how they could avoid it in the future, or how perhaps they can manage that trade. Or if they're posting a trade they're thinking about getting into, well, let's give them constructive feedback. Let's help each other out. And that's the value of the network. And you're going to be able to see where members live, not specific addresses, but cities, states. We'll be posting best restaurants. If you go to Chicago, you have a guy in Chicago, go to his profile. You're going to have the best restaurants that he likes. So a lot more coming here. This is just getting built out. This is the very, very early stages. Get in on the ground floor. So sign up using the form below on YouTube, above on Twitter, or use that QR scan code in front of you on the screen. All right, back to the charts. So Qs rolled over today on volume. Now, you know, at one point in time today, I was saying to myself, you got to lighten up on shorts. If we hold this breakout, if we close back above this line here in blue, you got to lighten up. And I was ready to take a loss, and at least a partial loss. I wasn't going to take the whole thing off, but the shares reverse. Now, could a good PCE number help tomorrow? Maybe, but we're already getting a rate cut. If you don't think that Jay Powell knew last Friday at Jackson Hole what the PCE numbers were, come on. He's not going to make a bold statement like that without knowing what the PCE number was coming out for the following week. He had an understanding of what the number was going to look like, at least if it was some raw data that he was looking at. He could divine, okay, I'm okay to speak about rate cuts now. I think tomorrow we're going to get a nothing burger. Let's take a look at how they close this out on the day. And you're able to see, oh, by the way, I meant to go back to this. Stoke RSI. Remember we spoke about this here. This head and shoulders setup. Right? So let's fast forward now. Qs. Why is it not on here? What chart was I thinking about? Oh, the wrong chart. I'm on a 30-minute chart. Okay, here we go. Back to the daily chart. And still no. I must have my charts mixed up. I do. I screwed up. Was it no. Dow? What chart was I thinking of? We're going to go through all of these. I'll run across it eventually. Okay, that's the triple Qs. Looking pretty bearish here. PCE maybe he's going to save it. Not quite sure about that. Now, the small caps have been rallying, but this week they have faded. And now trading down. Let's go to the IWM. This is a leveraged product. Now down. You got to be kidding me. Now down nearly 0.75% on the week. Thin volume. Let's go to the daily view. Now, the problem here for the small caps is that, remember, the small caps, they rally when you have a couple of things going, right? You have yields, which are declining. But what are yields doing on the week right now? We already went over it. They're breaking out. What else do they need? They need regional banks and they need biotechs to rally, because much of the small cap arena, biotechs, regional banks. So let's take a look at how they're doing this week. Biotechs down 2%. This is a leveraged product, but they're down on the week. And the regional banks, this is the KRE, they're down over a 0.5 percentage point on the week. So without these two components, the small caps, which have been the very, very strong of late, they're going to have a very, very hard time of moving up higher, especially when you have yields breaking out. Now, looking at the semi sector, the semis are down nearly 4.25% on the week. Now, if this doesn't look like a downtrend channel, I don't know what else does. So it's a broadening downtrend channel. I don't want to own semis right now. Let's take a look at a daily view. You know, not a horrific pattern here, but clearly resistance above. A bearish reversal bar on the day. Volume was heavy on the day. Consumer staples continue to be a leadership group, although they look a little bit toppy here, a little bit heavy, as noted by the topping tail on this week's candlestick. Let's go to a daily view. 2 consecutive down days, but still a very, very strong sector. Discretionary names. You know, I don't know how anybody buys discretionaries right now. I just wouldn't do it. Consumers tapped. And they're down over 1.75%, nearly 2% on the week. So I would avoid this space. Emerging markets. This is with China. EDC includes China, We'll go ex-China as well because we don't own this one. Emerging markets are down. Why? Dollar up, yields up. I'm sure EMXC is down as well. Yeah, down nearly a percentage point. This is without China, no China. So right now, avoid. As long as the dollar is strong, you don't want to own those names. But I don't think there's much fuel left in the tank for the dollar anyway. Energy, firming up here. Now, this is a good-looking chart. Am I a buyer? Not yet. I want to see how we close out the week. But I will have you take note of this. Look at RSI. Look at stochastics. These are both momentum indicators, and they are both breaking out. Price action's not yet. But if we close out the week above resistance like this, that's a pretty bullish setup. Let's go to oil, weekly view. It's flirting with trying to recapture prior support. Until it does that, I can't buy oil. I would avoid. What did it do today? A good day, but the weekly chart, it has to, we want to buy on strength. Here's your pivot point. It's got to close above $80 a share. We close above $80 a share, it's probably going to go a lot higher. Gasoline prices, they're down on the week. That's good to see. Natural gas. We've done a little bit of futures trading here. This was down about not gas, not oil. Natural gas before the inventory report came out this morning was down about 2%, maybe a little bit more than that. And then it reversed to close up on the day by, I think, about 2%. Oil is a leveraged product. We're going to go to a non-leveraged product. God damn it. Closed up nearly 1 3/4%. This is a bullish setup. This is an outside reversal bar, one of my top 5 favorite candlestick patterns, looking very, very good. FLNG, they reported earnings. They beat on EPS, missed on sales slightly. We own this. It's yielding over 11%. So the reason why we own it is not for the daily chart, not for the weekly chart, but for the monthly chart. Look at this consolidation. This breakout is going to be a monster if and when it does break out. Till it breaks out, we're collecting 11% plus on divvies. Gold. Bullish reversal bar on the week. And right now, we're at all-time closing highs. Last week, we had intra-week all-time highs, but at current, we have closing highs. And it looks as though we're going higher. Bad day yesterday, an outside bar today. Looks like they negated it, wants to go up higher. Even with the dollar rallying today, think about that. They usually trade inversely. Gold stocks. I think this is where, was it Nugget? I think this is where I had the, let's go to the daily chart here. Yep, it was with Nugget. I just remembered where I saw the head and shoulders formation on Stoch RSI. You can see it here on GDXJ. Head and shoulder setup. Left shoulder, head, right shoulder, break of the neckline. It's much clearer on Nugget, which we'll go to in a moment. Here's the weekly chart of GDXJ. Lagging gold down nearly 3 percentage points, but that's because the dollar is rallying. Yields are breaking out. Palladium, we own this weekly chart. It's broken out. In fact, we have a retest and a continuation breakout. Dare I say, it could be time to go buying more palladium. I'm going to wait until we get a close above $97 per share. I want to get out of this downtrend and I want to buy more into a new bull market. Not until then. Here's Nugget. Here's the weekly view, down nearly 2.5%. We're off the lows of the week. Now, the daily chart is what I was trying to reference earlier. I thought it was the Qs. It wasn't. It was this chart here. Stoke RSI, left shoulder, head, right shoulder, broke the neckline. So I would avoid this at current until the dollar weakens up. I don't care so much about yields. I care more about the dollar. We'll talk about silver more in a moment. I think that's it. Let's do some chart requests. Okay. Folks, we're going to be using the software provided by our sponsor, which is TrendSpider, automated technical analysis. If you are not using them, it's like an archer not having an arrow in his quiver. So use that discount code in front of you, the QR code, link below on YouTube, link above on Twitter, and we give it away free to our silver and gold level members. That's how much we use it. Okay, let's talk about SILV. Silver product. And again, folks, when we do chart requests, we're going to be doing Sunday Night Futures live inside of the new public forum. So Sunday night, we're not going to be doing this live on YouTube. If you want to watch us live, you're more than welcome to, but it's going to be inside of this community. So if you're not on the email list, enter your email address in the link below or above on Twitter, below on YouTube, and join us on Sunday night. Thursday night next week, it'll be inside the forum. And we just want to build up the community there. So hope to see you on the other side. And again, folks, I've priced out other communities out there. You have companies out there charging between $50 and $150 a month. I think that's crazy, but right now it's free. So join up, take advantage of it. All right, let's go back. Oh, by the way, this is where we're going to be hosting the symbols moving forward. A lot of people just joined in. So when you see this right before we go live, enter your symbols. This is where I'll be using on Sunday night. Actually, Monday night. No Sunday night futures this week. It'll be Monday night, but we will be going live on Labor Day. All right, SILV. A couple of ways of looking at this one. And I'm going to go by the one that is most friendly to my risk management, and that is we have broken down below a lower band of support. One trading day left to go. Maybe it's going to rally back and hold this support level. But at current, what we're looking at here is a bear flag setup. It has broken that support level. We don't know if it's going to close there, but right now it's not looking good. So I'm not a buyer here. Now, what if they rally this back by the end of business tomorrow, or next week they gap us up above $8.81 and we close there next week? Guess what? I'm a buyer, but it's got to be on strength. Right now, I'd be buying it on weakness. It's like being a boxer and fighting off the ropes. I don't want to do that. I would rather be more aggressive, and if I tag the guy, I want to keep punching. So you want to buy on strength. So right now, I'm not a buyer here. I don't like the setup. It's coming under pressure. The daily chart looks okay. We are widening out here in this downtrend channel, but what we want to do is we want to acknowledge the fact that we have a higher low. All right. But before I go opening a position here, we need to break out. We need to reestablish the uptrend. Right now, looking at the volume, all we're doing is just consolidating gains. I don't see anything horrible here. I'm just seeing a digestion of these gains, and we continue to put in lower highs and lower lows. Now we need to start putting in higher highs and higher lows. We're not there yet. To do that, we need to close above this resistance level right here, 908. Show me a print, 913. Show me a print above 913 on a closing basis. Then I'm looking at a long trade on Silvercrest Metals. Not until then. And I'm sure that if this is a silver miner, it's inversely correlated to the US dollar as well. So just be careful. PayPal. Now you can see here, revenues for PayPal have been grinding up higher. They're not growing at the rate that they once were, but they're grinding up higher. And look at the share price. It's not reflective of this EPS growth. So why might that be? Well, it's the rate of change of the EPS growth. They're just not growing as fast as they used to. So that doesn't mean that this is not a great buy here. I love this setup. The longer this is a monthly chart. The longer the consolidation, the greater the validation of any breakout. Now, let's take this off. And let's overlay. Where are my trend lines? Here we go. Overlay our trend lines. And look at this. This is the value of TrendSpider, folks. We broke out. This is a monthly chart. Broke out, danced around, retest, 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 follow through. This is a bullish setup. Beautiful breakout. Weekly view. Now, weekly view, you can see, again, these are the automated trend lines. I didn't draw them. That's the system. That's the algorithm. We're at resistance. I'm not a buyer here. I need to get a pullback. So what I think is going to happen, let's overlay on the weekly charts monthly support. And they should appear in dash line. Why is it not showing here? It's not going to come all the way back down here. We could come all the way. If this market sells off, we could pull back all the way to 66 bucks a share. Because this is really unsustainable. I'm not a buyer here. Longer term, I still think we go up, but shorter term, I'm bearish. Good breakout on the day today. The question is, do we hold it? I'm not a buyer here. How was volume? Volume was good today. I'm still not a buyer here. I don't like the weekly resistance levels, and I don't like the market in general. Okay, what else do we have? I think that's it. What time is it? 7:04. We're over. All right, folks. Don't forget, we will be launching tomorrow our public forum. So use this link below on YouTube, above on Twitter, and join us on Monday night Futures Live. We're not going live on Sunday night. We're going to go live on Monday night, and we'll be doing it inside the public forum here. It's free of charge. Join us. And don't forget, I will be doing chart requests as usual. The however is that I'll send out this poll, and in that poll, just type in whatever you want me to go over. If you want to attach a chart, do whatever you want to do. Develop it, bring ideas, and we'll create things as we move along. But it's going to be a great time. Hope to see you on the other side. And folks, have an awesome night. Have a great Labor Day weekend. I'm sure everybody's earned it. Have a profitable trading day tomorrow. I'll talk to you soon. Be well.